Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find that. In this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence I recreated here on this daily chart. It is the bright red 2008 to 2016 bullish shift pitchfork. And the key specific piece is the bright red upper time, currently at 13,366. That sits just above the top of the market. And has capped, despite being significantly pierced on one occasion, a number of significant thrusts higher seen in January and February. Indeed, this is the key piece of overhead resistance and only piece of overhead resistance seen here since the break up and out of the recent showrunner for this market in mid-December last year. And that's been that bright pink July 22 to January 23 shallowy bullish shift pitchfork that you can see when we broke out about that. This break higher originates and follows on from the Head & Shoulders continuation pattern seen between late September to late November 2025. So this leaves us with the question, what now? Well, there are at this time two possibilities, and I initially thought we might see the result by mid-February, as well as the likelihood of some false breaks as well. But I think this is now looking delayed. The first possibility was to look at the whole 2026 action so far as a possible complex Head and Shoulders top. The base of this pattern is the dark blue early this year pierced but not so far broken breached uptrend, currently at 12,773. Now, this was pierced last week, but there were no closes below it, though last Friday did open right on it, which seems to vindicate my appreciation of this dark blue uptrend. The second possibility involves the previously mentioned bright red upper time above, plus, well, initially I thought it might be the late November 2025 to date based uptrend, which is currently at 13,519. But that saw the targets reach both primary and secondary on the upside with that spike higher 2 weeks ago. So instead, I'd look again at the dark blue breached uptrend and look at it as a possible hesitation of some form prior to a further attempt higher perhaps. And grant you, neither pattern is perfect, far from it, but the opportunity exists and it deserves close attention. In all this, please be aware that as we have already seen, high chances of false breaks in either direction. Now, a single final thought, and again this is an early one as yet, but I've added ever so faintly both a November 25 to January 26 bullish Andrews and bullish shift pitchforks to the chart. I'm not highlighting them. I'm unsure about these, which is why they're not highlighted, but I will be watching them carefully in the future. LME 3-month aluminium. The markets break higher in early January, up and out of the late September to mid-November 2025 bullish shift pitchfork, was coincidental. And by the way, I do not think it was an accidental coincidence. It was coincidental at the same time as a move up and out of the more longer term, bright red, December 23 to July 2024 bullish shift pitchfork. My reasoning for this is that we were going to break higher. Well, if you were going to do that, then it's best to smash two patterns when they're close together, despite the additional resistance they may have, to better ensure a move higher than later when you have to deal with each one individually. The upper time, currently at 31.71, crossed over the shallower bright red upper time, currently at 30.75 on Christmas Eve. The market punched higher soon thereafter on the 5th of January. Now, as I said 3 weeks ago, and I quote, There is a possibility the market may now move along the top of one of either of these upper tines, and it seems to wish to do that with the now broken upper tine, and that is something to watch out for." End of quote. Well, this leads to another larger possibility, and that may be in the offing. This is not a very defined pattern. I don't think it has the required number of touches per side as yet. But we may have an April 2025 to date, very large, rising, expanding wedge pattern, outlined in bright green on my daily chart, currently 28.99 to 33.33. We are still within this pattern, despite a spike higher 2 weeks ago that breached it, which has been since repaired. Thus, I suggest this is also one to watch. Another feature to watch for, and one that became evident to me in my longer term chart when compiling the annual video commentary for LME 3-month aluminium. You can find this on the ADM ISI YouTube channel. And it is a very large November 2015 to April 2020 bullish Andrews pitch hook, which I've transposed on this daily chart and highlighted it in purple. The nearest tine is the purple middle tine above, which is currently at about 34.01, just under the top of my daily chart. This is not a target level, but a likely resistance, as it sits closely to the July 2008 high at 33.80. Now, one final point, and it's an immediate point, as to look at the action last week as a possible horn bottom. We haven't broken the top side of this pattern at 31.34, though we came awfully close to closing over it on Monday, yesterday. So just in case we do not have targets above, but just in case we do have potentials of a primary potential up in the 32.39 area, with a secondary harder to reach potential up in the 32.78 area. I suggest to see these we would need this market to maintain its hold over the bright red upper tine, and that is something we can easily watch for. LME 3-month lead. The recent key pattern here had been the original rectangle pattern that developed into the quite shallow early August to mid-October 2025 bull channel, which was breached on both sides in October and late November last year. And as I said 9 weeks ago, and I quote, "Enough that I no longer think this pattern is viable as a rectangle," end of quote. The recent break lower halted in mid-December last year at the 38.2% Fibonacci line for the whole of the 2025 move at 1939, forming a 3-day bullish morning star pattern, and moving higher, up to test the high of 2025, late 4 weeks ago at 21.05, and failed. I suspect this failure was due mainly to the nearby 50% Fibonacci line of the May 24 to April 25 move at 20.98. Indeed, I think this caused the high back in November last year, as well as the earlier in January high this year. Since then, we have pulled back lower, down towards the moving averages, and late 2 weeks ago pushing down through them. In the process of prices backing and filling lower, the market created a small January-based head and shoulders top, breaking below the dark blue neckline, which is currently at 20.06, late 2 weeks ago. Now, primary target at 1964 was reached last week, but we still have the secondary, harder to reach target X1 below, which is down at 1921, and that's still open. However, as I said 2 weeks ago, and I quote, "There is no real trend here. Just look at the major moving averages. They're all still closely packed together," end of quote. And this is still the case now. This brings me to my final point. It's a point I've been making here since the start of 2025 and will continue to do so going forward. It has been and still is to me the most important point of all. So the end of December 2024, we saw that 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, and prices are lower today than they were at the end of 2024. Well, just a little bit. This is not an endorsement of the annual key reversal down, but neither is it a strong countermeasure or repudiation of it. Hence, I still say, even now, with prices higher than at the end of 2024, well, around there, one should still look at things, all things going forward, in this coming year and beyond, in this metal, in the shadow of this longer-term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.